Well, as we head in, we are coming out of a year where we have seen 11 issuers default in the high yield market, and that is comprising of over 45 billion US dollars equivalent of bonds across. The high yield market has seen a pretty dismal negative return of about 35% in China high yield. So I would say that we're coming into 2022 with much of default risk fears being priced into the China high yield property space, which
Yeah.
comprises about half of Asia high yield.
How close are we to the bottom in terms of China high yield?
I think we're getting pretty close. I mean, I believe that in the first half of next year, we're going to see a bottoming, if not already getting towards there, because the market is really waiting to see if the government's pain threshold for more material policy easing hits. And a lot of the market believes that it's going to be within the first quarter. And this is the reason why in the last 2 weeks, we're starting to see reverse inquiries from long-only funds that have started to tap some high yield issuances.
Okay, so in terms of timing, also positioning, what's your thinking with regard to Asian high yield, by which we mostly mean China high yield, by which we mostly mean Chinese developer bonds?
Right. So, I think for us on the macro side, we are looking at a shift of policy by the government towards more growth stabilization overall. So that means macro policy easing and lowering the funding costs. The structural reform, while it will continue to be a longer term focus, it's going to be a bit on pause in terms of pace. And that's been announced, or it's been indicated that way in December by the Central Economic Work Conference, which sets the tone for more demand stimulus policy. And so we're starting to see since November a slower, the credit growth is not going to be at a fast pace, but there is starting to be a slow boost. And I think that will continue through next half of the year. Like I mentioned, the funding rate will be kept lower. They started to have a small decrease in the LPR, which started with just 5 bips, but I think that's an indication of what is to come. That it wouldn't surprise us to have in the next couple of weeks even more cuts in that, and there will be likely another triple R cut within the next month or two. So fiscal stimulus will also be a focus because I think with the property sector and the downturn, we are seeing far lower land sales. And so to boost and help balance the local government budgets, they're going to have to increase fiscal stimulus.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.